Can Tesla cause a market crash? We're going to talk about that right now this morning and then get into a bunch of possible stock picks that could outperform. Welcome, VIPs, to VIP Pre-Market Prep. It's Wednesday, December 28th. That means we have our 4:30 p.m. interactive Zoom session today, so tune in to that as well. All right, so Tesla. I was on Wolf Spaces last night, and there I expressed my concerns, and I've been telling you guys I am still on red alert, and man, the deepest of red alerts there are. We actually reviewed our allocations to see if there was a different type of alert that we can elevate to even higher or change our allocations in red alert. We decided not to do anything and stick with our allocations of 2-to-1 short, and I think 30% cash as well. So I am very imminently worried. Listen, I've been through the dot-com bust days. I've been through the financial crisis of 2008, 2009, and I can tell you there's a set of facts environment which happens right before a crash, and I feel like we're in it right now. When sentiment is really bad, you have a lot of contrarians out there that say, hey, this is the bottom, and that or a bottom, and that very often turns out to be true. But there's one condition in which the crowd is right. When sentiment is really bad, yet you still have a crash anyway, and everyone's puts win anyway. What condition is that? That condition is when you have a mechanical issue in the market where people are forced to sell, right? So there's a liquidity issue. There's forced margin selling. And this is what I'm worried about with Tesla. What we're seeing, the wealth destruction and the speed of that wealth destruction in Tesla, to me, is so unprecedented. This may be worse than even 2009 in terms of the amount of wealth that was lost really quickly in one mega cap stock. It is so extreme here that you can have contagion. You can have a snowball effect from some fund or multiple funds who are on the wrong side of the Tesla trade, causing margin calls. And maybe this can even happen in a distributed fashion with retail investors. That's possible also, where people on margin, they have margin calls and they're forced to sell other things. Can this bleed into a stock like Apple? Let's go to Apple right here, which hit a new 52-week low. Oh, no, not a new 52. What is it? A new 52-week low? Was that yesterday? Yeah. Hit a new 52-week low yesterday, Apple. And by the way, I don't see any further support below this level until it gets to the 200-week moving average of 112, right? And that is quite a move percentage-wise that could impact the NASDAQ. And, and even if it holds 112, that's still a bull market. You're still not pricing in a recession if it stays over 112. Look at where we're pre-COVID right here and where we're at the COVID crash lows. So I almost feel like getting support at the 200-week moving average is a best case scenario for Apple and the NASDAQ. So I continue to be very worried about a bad year in 2023, maybe a 20% down in NASDAQ and Apple. But on the bright side, I think possibly all of this could be pulled forward. I think the situation is so bad with Tesla that, especially if it breaches 100 and makes a move into the 60 to 80 range, which I'm thinking is possible, if something like that happens, you can have a situation where you price in the worst of the recession very quickly. Basically, you get a crash in the next few weeks, early in Q1, and that'll be the bottom, even if recession is still to come, because it just got ahead of itself. You have to price in that possibility of something like that. So, guys, be very careful. You can see QQQ, SPY, or flat here. Apple is... I don't trust this little up move in Tesla at all this morning. I'm staying away. I may jump in for a trade if it touches 100, but really what I'm looking for to step in, here are the support levels I'm looking at. Let's see if I can zoom in without this thing crashing. All right, let's see. It's the pre-COVID high of $63 right there is one level I'm looking at, which was also the level it broke. See that resistance right there became a breakout level right here. Okay, several months later on June 29th. So 63, an important level. And then you have the gap right here that forms. So the bottom of that candle there is 84.40 and the top of the previous candle, about 82. So between $82 and $84. So 63 to 82, 84, and then you have another support right there, like around 90, 92. All right, so these are the levels I'm looking at to possibly step into Tesla, but really I'm watching Tesla very closely because of possible contagion and forced market selling in Apple and the major indices. So it just feels like that. I've been through many of these crashes, and this is the highest alert I've had since all of this started, since the really bear market started for risk assets back in last November. This is the highest alert level I have right now. So getting into some individual stocks. Despite that, I looked through all my stocks last week. We did very good on the Trade of the Week competition at Wolf last week. We got an average 5% return between two stocks. They each did about 5%. It was CTLP, and the other one that we picked was Geo. They both did about 5%. So believe it or not, though, we didn't win. Almost everyone did about 5%. The average was 4% last week. Wow, great panelists last week on Traded on Wolf Financial Spaces. Good pick. So this week, I picked CLF and TGB because of the relative strength, because of the news, because of the catalysts that are impacting the fundamentals here. CLF, I still think it has room to 19 swing target. And TGB, we know about that 50 million investment with an implied 1 billion valuation just for one project. And you see the market cap there at 440 million. So still looking at 175 target on TGB with the relative strength there. And copper up, commodities have been up because of the China reopening trade. So that's why I picked CLF, TGB. But if we get a market crash within the next week, all bets are off. So make sure you appropriately balance your portfolio however you like to do that. All right. I want to dig into a couple of these other ones. Geo, I'm out of this. Again, I was in and out. This SCOTUS really made it difficult for me. But SCOTUS ruled yesterday that this thing's going to be indefinitely on the books, Title 42, until there's a full hearing on it in February. So that's at least another month where Title 42 is going to be enforced. So look at this. I mean, look, I know that there's still people coming through the borders. I know there's a problem in El Paso. I know fundamentally that's good for business. But this whole entire move right here was because a judge said Title 42 is going to be repealed, this entire move. So when I understand the chart, I see the story behind the chart over there, then I'm not interested in holding it now. I gotta believe it's got much more downside to go until we get closer to the court case in February at the Supreme Court. So I'm out of Geo for now. Let's just quickly look at PT and APPH. These are two picks of day trade kind of ideas from yesterday. APPH, I was completely out of yesterday. I really wouldn't recommend going into it at this point. I did do a little more research into their balance sheet and this 127 million sale leaseback. I didn't think that this is something. They have some issues basically. They're burning a lot of cash, and and it's not that it may not be the end of their capital needs or dilution. So APPH, not a long-term pick for me. I did get out of that yesterday. On the other hand, the other one I played and I'm down on and I'm keeping is PTE. They got a buyout offer of $1.03. Well, this didn't work out. I bought the gap fill around 80 cents and I'm down on that. But this one, I made room in my portfolio to swing it. I'm thinking it has a little, at least hopefully I can break even on that. But yeah, maybe it'll get bought out. That, it's a letter of intent. Hopefully it'll go through at $1.03. We'll see. All right. We got a couple here. I'm going to talk about community ideas right after CTLP. So CTLP, I continue to like this, but the market's giving it a hard time. As soon as the market has any sort of momentum to the upside, this thing is going to explode, in my opinion. It's been holding up very, very well in a rough market. The 20 DMA is coming up to meet it for support. So 430 to the 200 DMA. Those are my two resistance levels, two targets, but it may not happen until we get a nice green day or two in the market. I'm continuing to hold that as a swing. Now, there's three stocks here that I don't own yet, but man, let's start with GNRC. These are community ideas. This one for Tony, generator idea because of the cold. So I thought that was a great idea. I did mention that to him yesterday morning. I'm like, great idea, Tony. And lo and behold, they get a big upgrade today. I don't know, is it in my feed? December 20, $160. Wow, there's multiple here. It looks like Janney Montgomery Scott. Yeah, it's Janney Montgomery Scott, $160 from 90. It's already up 3%. So man, we should have listened to Tony yesterday. Not only do we have the sentiment of that record cold, where people are probably going to go out and buy some generators who were impacted. But now we have the upgrade from Janney Montgomery Scott of $160. You could see the 50 DMA as dollars and declining. That could be a target for this. So GNRC, thank you, Tony, for bringing that to our attention yesterday. Great idea. It could have some legs today, possibly on pullbacks as a day trade if you want to day trade it. Thank you, Tony. We should have listened to you yesterday. Maybe some other people in our community did. GNRC. I want to give a kudos. I haven't mentioned this. I mean, Chris has been pounding the table on TUSK, TUSK, for the better part of a week, and it's been only going up since then. It is an energy name. He did some deep due diligence into some SEC filings, which indicate that they're due to get some massive payments, I believe, from Puerto Rico. You're not going to find this in the news feeds, and apparently that's what's been driving the stock up. So I don't own this yet. I think this just hit a new 52-week high, and right there, that print right there, 838 was 858 to 52-week high. But yeah, this is looking great, obviously, and I don't like to chase this. I don't know. Maybe we'll get Chris on the show, and he can convince us of what the fundamental value of this is at some point, to say, how do you buy a stock that's going from 2 to 8 in the last 6 months in this market, 3 to 8? Maybe it's worth 15. All right. So let's just wanted to introduce this stock to you guys, and maybe we'll bring Chris on the show at some point when he's back from vacation so we can talk about it. He's put the thesis in the rooms, but I think it's much better to get him on audio video to hear the thesis, and maybe there's still room in TUSK. So good job, Chris, on identifying that and getting some of that upward movement so far. David's T. This was an old-time favorite in our community a couple years ago. I mean, during the heyday, this thing exploded, you can see. But now all the way back at the bottom, Alex brought it back into our attention here. There was a Seeking Alpha blog post, I believe, yesterday. Looks like some deep analysis. I only did skim it, but it did capture my attention because the author did some work here on that's weird. I got a battery warning even though I'm plugged in. Okay. But anyway, the author did some work here looking at web statistics to guess what revenue is going to be. And I love that methodology. It's worked for me several times. So I think that article may have some credibility. So it may be worth it to go look at that David T. article. And after it was distributed, you could see some other people probably in our community liked it. Went up from 72 cents all the way to 80, back now at 75 cents. So David's T, it's also priced for some liquidity issue in terms of their balance sheet. 21 million market cap. It's trading at a fraction. You can see Q3 sales are 16 million. So it's trading at, let's see, about 0.3 market cap to sales ratio. So that right there implies some sort of debt issue. All right. So you got to be careful with this. But if they're able to overcome whatever debt issue there may be here, this could be a multi-bagger. All right. So I haven't done the research. I don't know. But you can go ahead and look at that Seeking Alpha article. And there is a potential that there's a awesome opportunity here. Alex, thank you for bringing it to our attention. All right. Want to point out, let's go into some of these other stocks. ADM, remember this? I was looking for an all-time high breakout, and it didn't happen. You can see there was some news over here, which I didn't quite frankly understand, something to do with some government regulation or proposed government regulation, which caused it to go all the way down. Now it's back nearing the highs, relative strength. I don't own it. Again, I don't own it at this point. Actually, I might own a small amount on my IRA. I got to check. But in any case, this is possibly going back and doing what we wanted it to do at the beginning, going over 100 and getting to new all-time highs. So that's just back on our radar, and I'll be monitoring it a little bit closer. ADM, thank you, Yosef, for bringing that to my attention last night. All right, now some individual stocks I'm still swinging. CTMX, it's been rough. Hopefully, first week of January when they have the conference, we'll get an event anticipation run and we can get a nice profit out of this. I'm going to be selling before the news. With these biotechs, that's the thing to do, is to play the run up into the news and into the data release and sell before, at least sell half before. That's a good way to play that. You can see tier 160 resistance, and that's the resistance I'm really looking for, 173 on CTMX. Just want to bring up Clearfield because if the market does crash, if Apple crashes, if you start seeing rumors on TV about hedge funds that are liquidating, that have forced margin selling, that's how it always that's blowing up. If you start seeing that and the market crashes, I think Clearfield can see $87. There's many multiple support levels at $87, including the 200 DMA. So, and that would be an awesome area, I think, to pick it up if you haven't. But just letting you know, it could go there technically. And if it goes down another $6, it doesn't mean there's anything wrong with the thesis or the stock. It's just technicals take over when the whole market goes down. So this is a possibility, seeing 87 Clearfield in a market crash. All right. LLAP has been holding up. So this is a swing trade. I've had it. I still haven't let go of it. I did reduce after it failed to break out here, but 175 is the target, and now you have resistance at 157 because it failed that breakout there. But the MACD's flipping, and it was pretty resilient yesterday when the market was down, and then you had this big volume, which at the end of the day, Friday, which is interesting. So LLAP is holding up. Another one that, I said CTLP may need a market green day or two to take off. LLAP may need that too. But if they get it, those two stocks look poised to really do well. Com has earnings today after the close. So this is a big earnings winner. What's the PE there? 11. This is an egg company. This is a huge earnings anticipation run, so I'm not sure it's wise to get in today, but maybe there's a trade in there. It probably will have a nice hour or a half hour right before the close because they're very profitable. Egg prices have been very high, and people are probably anticipating another great earnings report out of Com. So take a look at that. You may want to do some fundamental research on that. It may be interesting to some people, but it's always hard to buy at these levels when you miss that whole run up. But Com, listen, earnings, if it's a blowout, you just do the math on it. Right now, the trailing PE 11. So a good trick is to assume the market's going to keep the same multiple of 11. And as soon as you see the EPS print, you'll want to take that number and annualize it. Actually, what you really should do is annualize the number of last quarter to get the current ratio. So let's take a look at that. 257, right? So 257 was last quarter. So 257 times 4 is $10.28. So then at $10.28 and $65 stock price, you're talking about a 6 PE. So that's what the market's rewarding it. That's the multiple, about a 6 on a annualized number. So take today's number and let's say, for example, it's $3 and you annualize it to $12, right? And then you throw a 6 on there, that gives you $72. That can give you an idea where the stock can go to imminently. And if the stock's at like $66 and after hours or something, you can pick it up. That's how I do this. I do pretty well on with that kind of methodology. But it's also important to know what the market is expecting. You don't want them to miss. I threw out a number there, $3. So definitely have to look up what the estimates are. I don't know what the estimates are. So take a look into Com. It's a possibility we'll see a blowout because of egg prices. And that brings us to the end of our show. Don't have any really strong conviction for today, except, what was it? My two picks for the week, CLF and TGB. There's a reason I picked those. They both have strong charts and relative outperformance. So perhaps those could be day trades or swing trades still throughout the day. And we're just going to monitor Tesla, keep an eye on Apple, be careful. And we'll see you at 4 p.m. for post-market wrap, and then 4:30 p.m. on Zoom to talk about whatever you want to talk about. Thank you, everyone. Have a great day.